Hi everyone, and welcome to the EcoInvestment. Hi everyone, and welcome to the EcoInvestment update for 2016, January 3rd. It's a new year. It's been cold. It's been damp. It's been kind of miserable here in NorCal. But they tell me we need the rain, so we'll go with that for now. And it's nice to have the warmth of the fireplace, even though it's an electric one with the simulated, genuine imitation fire inside. It sure feels good. Anyway, let's get right down to it because it's a new year and expectations always run high for the new year. And as you know, coming into 2016, we've been decidedly sort of on the negative side here, believing that if we do manage to move higher in this market, it'll be because the Federal Reserve, with their low interest rate policy for 9 years, created or is in the process of creating a bubble. Now, we have to weigh that speculation or that thought about whether we're in a potential bubble with all the sort of negative factors weighing on the other side now. And we saw more examples of that over the weekend with the killing of, in Saudi Arabia, the beheading and execution of, well, a fair number of Shiite clerics in that country. And one of particular note that caused the Iranians to break off and Saudis to cease diplomatic contacts with each other. So you have the Shiites, the Shia and the Sunnis. That friction is really heating up there. You throw in the fact that oil is struggling to maintain $35 a barrel. And it's just a further friction point of destabilization in the Middle East. And the last thing we need is more of a refugee flow of people coming to escape Mideast turmoil into the Western countries. Everybody wants a better life, and we all understand that, but not everybody can be accommodated in that regard. So where does that leave us in terms of the market? Is there any value out there, in my opinion? Well, I always think that precious metals are good value, reason being when all else fails, proven through history that they tend to be excellent stores of value. They're very tradable, they're very desirable, and they pass easily. They're liquid. People will accept them, especially if you're using something like silver coinage from 1960 and before in the United States, which you can buy in $100 and $1,000 face bags, and stick them away, and you have sort of an emergency bulwark against disasters, because you might think, well, it'll be the rare person that wants a piece of silver. Well, you might be surprised, because unlike some things that are tradable, this has the ultimate tradability because its value is immediately recognized and a value can be put on it dollar-wise. So it makes it a good thing to have, and it's good value right now at the price of $14 and something an ounce. Let's get on to the bonds. You know that interest rates are still struggling to rise. The short end looks like it's under a little bit of upward pressure, but believe me, if the market starts to tank in a major way, then you could see interest rates back down below 2% on the 10-year. Look out below. I mean, it's no slam dunk that interest rates are going to be moving higher. The only time that they'll really start to move higher is when there's a recognition that there's too much debt to be rolled over in the world. Then you'll see people pull back from the lending market in a major way, with a consequent rise in interest rates. So for stocks now, we have to be very much on our guard. The Christmas season was nothing to write home about unless you're Amazon, who sold, I think, $100 billion worth of stuff this year compared to last year, and online shopping went gangbusters. Now, Amazon, of course, is still 1/5 to 1/4 the size of Walmart, but one is growing while the other's shrinking. The same thing can be said for Macy's. We talked about that before. Quarter after quarter after quarter, their sales are shrinking because more and more of the market's being taken away through the efficiencies of the internet and online shopping. So those pressures continue to throw in the fact that at the end of 2015, we started to have a spike up in layoffs and first-time claims for unemployment. You know, be careful with the very laggard Christmas shopping season. The layoffs, the bankruptcies could really come fast and furious as the reports come in. So weigh all that out, and I'm very defensive going into 2016. As you know, guys know, I've lightened my holdings considerably over the last 5 or 6 months or so, which I think has been a prudent thing to do. The market is slightly lower than where I was starting to sell about 4 or 5 months ago. So the jury's still out as to whether I made the right call, but we are still on a red signal here for investing, meaning I don't want to put any money into the market. And in fact, except for the margins of airlines being great but offset by threats of travel and terrorism and all that, there's really not a lot of attractive places in the market right now. So that's another reason to keep my hands sort of tied here. So not much to report on other fronts. There'll be a while before the economic news catches up from Christmas, but stay tuned. This is a seasonally strong time of year for investing. The pension money typically likes to come in early to be fully invested for the year, so you always have that sort of upsurge with money. But be careful, because there's people equally excited about selling into that demand too. So let's keep an eye on that. Anyway, Happy New Year to you once again, and I will see you again in a week from now. I guess that will make it January 10th. Thanks for watching, everyone.